Hi everyone, Donna here with Bookkeeping Made Simple, and today I want to talk about profit first, what it is, whether or not it's a good idea, when to use it, when not to use it, and what effect it's having on your business. So let me just kind of start off. Profit First is a very popular book. It is written by Mike Michalowicz, if I'm pronouncing that correctly. Hopefully I am. And it's basically based on the idea that if you see money in your bank account, you're going to spend it. And I guess for some people that might be true, um, but basically, if you see money in your business bank account, you're going to find a way to expense it all, and there's not going to be anything left for a salary or taxes or payroll or anything like that. So I am not a fan, um, except in very specific situations. Okay, so he suggests that you take your salary out first as the business owner, that you take your salary out first and that you take your profits out. It kind of comes from the idea of Parkinson's law. And Parkinson's law basically says our desire for resources is going to expand to consume all of the resources. So if you have 3 weeks to prepare for a presentation for work, you're going to take the whole 3 weeks to do that. If you have 3 hours to prepare for a presentation, you're still going to take all 3 hours, and it's going to be the same presentation, basically. Same thing with food. If allegedly, if you have a plate of food in front of you, you're going to eat it all and be satisfied. But if you have half of that amount of food also on a plate and it's the only thing in front of you, you'll eat it all and also be satisfied. Whether that's true or not kind of depends on the person. But it's also why a lot of times diet coaches will say when you go out to eat, ask for the box up front so that you can take half of the food and put it in the box, save it for later. But anyway, the core principles of Profit First, it's basically an envelope system. So you take money out of your revenue and you put it into different buckets that you're going to put aside for later. And some of the buckets kind of make sense, but most of them do not. If you are trying to grow your business, it depends on the goals of your business, and it depends on how disciplined you are. Okay. So if you own a mature business, you don't want to grow anymore, your income is stable over time, you you have the same income month after month after month. And yeah, if you really struggle with managing your cash flow, then yes, Profit Work First might be a good idea for you. But most business owners, most people that I know that are starting a business, they want to grow something big. They want to make a difference. They usually, starting a business is expensive, it's time consuming, it's draining, it's stressful. It creates a lot of, if you have employees, now you have people that depend on you, that you have to put first. And if you are pulling all that money out to put in, if you're pulling your profits out first and only paying expenses with what's left, then you don't have anything left to grow your business on. So yeah, there are some limited applications for it, but I do not like it for business, and I'm going to explain why. Number one, in your first year of business, you are not going to make a profit. Really. You're just not. You're going to be putting everything you can into the business. In fact, for the first 5 years, you should not expect to make a profit. Why? Because you're trying to grow something. You need to spend money on advertising, on marketing, on general startup costs. You need to spend money on, maybe you want to spend a lot of money on coaching, which, by the way, I recommend that. Even if you don't think you have the money, put it on a credit card or something. It doesn't have to be with me. I don't do that. But I do recommend that you get a good, solid business coach that's going to hold you accountable. If you look at business leaders that have done really, really well, And by that, I mean, do they have an 8 or 9 figure business? I would want to see at least 2 commas before I follow someone. I really want to see 3 commas before I really start looking at someone. I want to see, going back to 2 commas, I want to see 9 figures in revenue before I start to really listen to someone as a guru. There's a lot of business coaches out there that don't know how to run a business. So you have to be very thoughtful. But with that said, oh, and by the way, watch out for all the ones that are leaning on their Lambos, because you can rent those. And if they're carrying on about their Lambos and their crib and all, they're probably not very good. All of the really, really powerful business coaches that I follow are very humble. I mean, they have big houses and they have Lambos and they have all this, but they don't flaunt it. They talk about things that feel a bit more achievable. And so profit first is the envelope system. You take your money, you put it aside, and whatever's set aside, you don't spend. When you're trying to grow a business, the fuel for your business is cash. And so when you're trying to go into business, then you are going to need to have cash to fuel your business growth. That is, by the way, why credit card companies really love business owners. We need that extra cash. We need to be able to leverage some money, especially if you are in a capital heavy business where it takes a lot of capital to get started. For example, if you are going to buy something that involves heavy equipment, it's going to take a lot of money to get you started. Even if all you're doing is if you're doing online sales, if you are selling through Amazon or Etsy or eBay or anything like that, you still have to buy inventory. And in the beginning stages of your business, you're going to need to buy inventory ahead of time. So you may have to really be thinking, you have to think ahead about what you're going to need. And if you don't have the cash available and you're not allowed to go back and take the profit, reinvest it into your business, you're not going to be able to grow. Money is your fuel. Another way to think about it would be if you're going on a road trip, you're not going to take half of the gas. You're not going to fill up your car, take half the gas out, put it in a gas can, and leave it in the trunk of your car for your road trip. And you can't touch it, even if you break down on the side of the road. That makes no sense at all to me. You have to, if you're an entrepreneur and you are really serious about growing a business, you have to be willing to invest everything into it. Sorry. Business ownership is not easy. It is hard. It is expensive. It is strained. It is stressful. It is stressful. So when you're first getting started, you are probably going to need to spend money on advertising, on business coaches, on building funnels, on a lot of different things that you may not have the money for right out of the gate. So you may need to put your personal money into it. Now, as you're growing, you're going to have a better idea of what's possible. You're going to be able to start being able to forecast your revenue. You're going to need to continue to invest money into it so that, again, when you start a business, you're investing money first to have a big payoff later. And it's not for everybody. I'll be the first one to tell you that. So some of the things that I've seen people do that are quite against the profit first principles would be to hire a business coach. Every single business owner that I have ever talked to, followed online, dealt with at all, who is wildly successful, has had the story of, I spent a lot of money that I didn't have on a business coach because I believed that they would help me grow. Money they didn't have. You know, Russell Brunson talks about it. He will come out and say, I maxed out my credit cards to go to this event because I knew it would help me grow my business, and it made my wife mad. Every single business owner has had this story. Okay. I have spent money that I don't have in order to fuel my business. It's just one of those things that you almost have to do it. You have to be very mindful about it. You have to be very thoughtful about it. And you have to be strategic about it. But you're going to end up spending money that the business does not have in order to move the business forward. Again, you're investing money now for a bigger payoff later. And that's going to be things. It's going to be things like a business coach. It's going to be things like a really scary advertising campaign. Let me tell you, when you're spending money that you don't have on advertising and you're not sure if it's going to work, it's nail biting. Okay. But you have to do it. If you want to increase your revenue, you have to spend the money. And when you spend the money up front, again, you're kind of, instead of investing backwards, like Profit First suggests, you're investing forwards. You're investing money now for a big payoff coming down the line. So I spend money every month on ads, and it comes back to me in increased revenue. But the first thing I have to do is spend money on ads. I also have forgone a paycheck for many years. I have a little bit of money put aside, not a lot, but that is to pay just to cover some of my expenses. My business does make enough that I can take enough of a check to cover my expenses, my personal expenses. It does not, I don't take a check. Everything that I possibly can put back into the business. Again, I make sure that I'm fed and housed, and everything else goes back into the business. So if you want to grow your revenue, you have to keep investing. Some of the things that I know people have invested money in that they didn't have money for are things like mastermind training. I am actually planning to go to a mastermind training next year. I'm already putting money aside for it because I think it's critical for me to grow my business. Any kind of mastermind training I can go to. I really want to go to it because that's where I get ideas to grow the business. I know I'm going to get a return on my investment. Now, as your business grows over time, you're going to start to see what your revenue is, what your minimum revenues are, what your, how much more you can grow. Your business starts to be a little more stable. Maybe you know how the ebbs and flows of your business are going to go. And you are, a little bit more able to do things. And maybe that's when you put Profit First in. But honestly, you're going to put a lot of money into your business in the first 5 years, then you're going to get out. So the problem with Profit First, again, is it's taking the fuel out of your business. You've got to have cash to run. And you can't afford to do it. Now, again, first 5 years, I would not even think about having a salary. First 5 years, I would not even think about having profit. And if your business is in trouble, then you're going to have to go back to these original principles of, one of the things I do like about Profit First, by the way, is they suggest really being on top of your accounting and bookkeeping, which is something that we do. We really want to help our clients stay on top of it so that they can make strategic decisions based on reality and not based on what somebody else seems to think that they should do. I can talk to them about what I see from my clients, the clients that have gone out of business because they didn't listen to me, the clients that have stayed in business and grown a lot and left our practice because they needed a CPA because they were going to IPO. They were going to have an initial public offering. They're going to be traded on the stock market. So yeah, so there's a lot of things that that needs to go into it, but I do not like Profit First for startups. I don't it makes more sense if it's your personal brand. My business is not my personal brand. It would be very easy for someone else to come in. I can sell it, for example. That's one of the things I want to say. I can sell this business because I am not the business. The business is not me. I am the face of the business for right now, but someone else could come in and be the face of the business just as easily. And I'm not branding this on myself. It's on accounting and bookkeeping principles. It is not on what I can do. So some things to think about. Kind of keep in mind the biggest business owners in the world didn't take a salary for years. If you think Jeff Bezos took a salary from Amazon when it was in the startup phases, you would be thinking very wrongly. He put everything back into the business for a good 20 years so that he could have that payoff in the end. And now he's one of the richest men, certainly one of the richest in America, maybe one of the richest in the world. I'm not quite sure where he falls on that, but he's definitely not poor. So number one, if the business is your personal brand, you don't need to take a profit ever. You can pull out enough to pay your bills and then continue to grow. But if you're going to sell your business, then it becomes important to show some sort of a profit, because your profit is then multiplied by how stable, a multiplier that determines how much you can sell it for. And that multiplier is going to depend on the health of the business. But what I see a lot in businesses that fail, one is they're following profit first. Every single one of my e-commerce people who have followed profit first has failed. Or at least they've gone out of business. The other thing that I see is the ones that are wildly successful are the ones that are taking these huge risks in the beginning. So, but again, when you take a risk, you have to do some cost-benefit analysis and risk-benefit analysis and determine whether or not it's even a good idea. Sometimes it's a really good, if you're going to a mastermind, if you're getting a good business coach, absolutely spend the money. If you need a VA, every single business owner that I know has had this issue of, at some point early in their business, they have spent money that they probably shouldn't have spent on things that will help them grow their business. Now, I'm going to kind of back up a little bit. Every single business owner that I know that has gone under has also done things like they've had some mindset issues that I will cover in a later video. So, is profit first a good idea? If your business is mature, if you want to pull the profits out because you want to sell the business later and you want to show profit, if there's some ifs, for the most part, I would say no, but in certain circumstances, it can be helpful. If you're having cash flow issues, it can be very helpful. But again, that's something that you would have to talk to your accountant about. And with that said, that's my thoughts on profit first. No, I don't like it. And again, from an accounting perspective, I think it's overcomplicated and difficult to implement. But for some people, it can be a good fit. I don't think it is the fit. And with that said, I will talk to you again soon. And as always, if you enjoyed the show, please like, share, and subscribe. If you even, if you were entertained by it. And on YouTube, hit the red notification bell. You guys know what to do. I don't even know why I keep saying it, except to remind you. And I will talk to you again soon.